What's up, guys? So today I just really want to share an important lesson on the best way to pass funded accounts. So a lot of times as new traders, which I'm guilty of as well, we tend to want to reach profit target as fast as possible. We don't have a sound trading model. We don't have set RR. We don't have a set our known win percentage. We're not risking a certain amount per trade. We're just overall going blindly into trades, trading leverage blindly, going max leverage, which is what these firms really want you to do. The more that you use higher leverage with a small drawdown, such as on a 50K Apex account, you have 2,500 in drawdown. The more you use that higher leverage, the higher of risk you are at blowing that account, and the more funded challenges that you're going to buy. So don't fall for the bait. Go the slow and steady route, and trade like a real successful trader. So today I'm going to show you exactly how I would go into a funded account challenge myself and how I would look at it. So as you can see here, and if anybody wants these sheets, let me know. We have a drawdown and risk to reward calculator, and we also have a position size calculator, which I'll get into after this. But let's say, for the sake of this example, that we're going to take an Apex account. We're going to buy a $50,000 account. We have a drawdown of $2,500, and we have a profit target of $3,000. Let's say for this example, which I'm going to show an example in the charts as well, is that your model is a 5-minute on the 5-minute chart protraction during lunch into a lower time frame fair value gap, essentially the 2022 ICT model, a protraction up into the fair value gap, and then a run lower for the previous low that created the swing high into the fair value gap, which you'll see on the charts in a minute here. So let's say that's your model. The day's been going down from a high time frame PD array. We're in a sell model overall in the market, and you're looking for shorts. So we have a drawdown of $2,500, and let's say for this example that you know that you only want to risk 4% per trade. So that's about $100 per trade if you're using the $2,500 drawdown, because when we're trading these accounts, you can't do not take the percentage. Personally, don't take the percentage of the account size. This is your actual account size, and this will fluctuate as well. So you have to change this around as your drawdown changes. So again, let's say you're risking 4% per trade. You can risk $100 per trade, and this gives you sound right here, 25 trades. You would have to lose 25 trades in a row to blow this account. That is really hard to do. If you're doing that, you are not trading right. You don't have a model, and you need to go back to the drawing board. But let's say, for example, on your model, you know that you're 60% profitable. So let's write this out. You're 60% profitable, and you only go for trades that are going to give you at least 2-to-1 to risk reward, 2-to-1 RR. So let's go to the chart now. So as you can see here, on Friday, for this example, let's say we're coming out of this daily fair value gap. We knew it was going to be sell day. There was, believe, news on Friday. I'd have to look back to confirm that. But overall, we know it's going to be a sell day. We came up, we took some liquidity. We respected a higher time frame fair value gap. I'm trying to remember what exactly happened on Friday, but for the sake, let's just say we're coming out of a high time frame day and it's a sell-off day. And again, our model is a lunch hour protraction into a 5-minute fair value gap, and then aiming for the lows. So here you can see this example right here. We have a 5-minute fair value gap that we're looking to short. We had the lowest low that created the swing high into the fair value gap. Sorry. So this is our target. We will label that. That is our target. Our entry, we're going to do as soon as we enter this fair value gap. The reason we're going to enter this fair value gap is this low we created right here before swinging high. I call this essentially a backside. You could also essentially call this, if you're looking at it from supply and demand, a area of demand turn supply. essentially. But I like to call these backsides. ICT also has concepts as well that discuss these areas. So again, let's say that this low is our target. We're using essentially the lunch protraction. So from 12 to around 12:50 to 1 p.m., we're essentially going to be looking to go short if it does enter into there. Before, as well, as you can see here, we entered it right at 12:30. So let's say during the lunch protraction, we're willing to take that short as we entered up into a fair value gap here with this backside, I called it. So let's say that we're going to set our risk to reward. We're going to take a short. Let's say again, we're going to enter right when we enter that fair value gap. Our risk is going to be above this candle, the open of this down close candle right here. And so that stop is 8.25 points. So let's write that out. 2.5 points. And we're aiming for this low that created the swing into this fair value gap. And so we're going to risk 8.25 points to make 20.75 points. Okay. And that RR is about 2.52. So we're getting our 1 to 2 that we need, and we know that our win rate is around 60%. So knowing that we are risking 8.25 points, we're going to go ahead and head back to our RR sheet. So let's head back there. And on here, we'll go to our position size calculator. We'll go here. We'll say, for the sake of this example, we're risking 8 points. We know that if we're trading MES contracts, that we can trade 2.5 contracts. So trading 2.5 contracts on the charts, we're going to risk about $100 right there. I have to do the exact math, but it essentially gives you that RR because we input within the sheet that we're risking 4% per trade. So we're risking 100% trade, and it calculates it for you based on your stop. So again, our stop was 8.25. We set it as 8. You can trade 2.5 contracts. If you get stopped out, you're going to lose $100. But our RR is 2, so we're risking 100 to make 200. So go back to the chart. As you can see here, the trade ended up working. Let's say for the sake of this example, we'll set it to the 2.0 right there. Let's say we obviously got that. We made our 2R, and we sold for the $200 win on this exact trade. So go ahead and delete this and delete this. I just want to take you now. I just want to show you exactly, I guess, how that would look in terms of numbers if everything played out exactly by 100 and 200 over a series of trades. So let's head back into the sheet here. And now you can see on the drawdown on our R calculator. We're going to pull this open. We're going to turn this back to white here. So you can see over a span of 20 trades, if we know that our model, our lunch protraction into a fair value gap and aiming for the lows below with at least a 2 reward for 1 risk. So you're making $2 every $1 you risk. Over 20 trades, you're going to have 12 winners and you're going to have 8 losers. So over that span, you're going to have a total profit of $2,400 and a total loss of $800, coming to a total of $1,600 in net profit. And so as you can see, obviously 20 trades, maybe that takes a while. That's 20 days. Okay, but as a new person, you need to take it slow. You need to get a better idea of your model, become better at trading, work on your psychology, work on doing this the slow and right way, because over time, these things are going to compound and you're going to make way more money than the person that's still trying to over leverage and pass funded accounts like crazy without set risk to reward, without set percentage of their drawdown on funded accounts. They're primarily using funded accounts. So again, just do this the way that you should and learn from my mistakes, that you need to take this slow, again, as a new person, and you need to do it the right way. This would be really hard to win or lose 25 trades in a row if you have a somewhat idea of knowing what you're doing trading in the market. So really focus on this, work on this. Just set a goal for your next challenge account that you're going to take it slow, that you're going to respect the drawdown, you're going to respect the risk to reward, you're going to have a solid idea of your model. And even if you don't know your sound model yet, use a challenge account, to test it, because it still gives you a certain level of motion and investment. It's not the same as demo. You still have some investment in it because you paid for the challenge account. So use a challenge account, specifically Apex. They do awesome discounts all the time, and I can include a link so you can check them out in the description of this video. But again, use this to learn, take it slow, and with this, trading a somewhat healthy model with good RR, um, and just respecting the numbers, it's really hard to fail a challenge. And if you just take it slow, I promise you that your pass percentage on these challenges are going to go way up. Over time, you're going to be way more profitable, and it's going to make you become a way better trader. So just wanted to go over all that today, and I hope you learned something from this. Thank you. See you guys.